Hello, everyone. My name is Christian Jane Kongstedt, and this is my Q2 2023 quarterly conference call with eToro, Copiers and Followers. My name on eToro is, as some of you may know, CPH Equities, and today I'm going to tell you about some of the things I've been doing for the last quarter. I will give you a short presentation of myself. I will tell you a bit about my long-term investing goals and the strategy update. I'm also going to speak about the current market and developments in AI. And then I'm going to say a little bit about how to use ChatGPT for investing, because I want to tell you something that's related to AI and how you can actually use AI yourself. And then I am giving an overview of the portfolio as well. And it's possible to ask questions during the presentation. You can go to the Q&A and ask your questions there, or the chat, and then I'll answer your questions later in the presentation. But first of all, I'm going to go through the slides that I've presented, which will cover those topics. And I'm going to take the presentation of myself a little bit faster this time, as I think many of you may have heard this, and also I have a lot of things to focus on later in the presentation. But in short, I originally trained as a journalist on the Danish journalism school, and I graduated more than 20 years ago. I'm living today in Denmark, in Copenhagen, with my wife and my two sons, and I've been investing for the last 17 years. I started investing just before the financial crisis, and this was a good learning experience for me to know how it was being part of a market that just went up and up and then crashed at some point. So watching financial crisis unfold is certainly something that teaches you something about investing. I've been investing part-time since 2012, which I've been using 50% of my time on this since for the last 8 years. And the last 3 years, I've been investing full-time on eToro and using all of my time to look at companies and communicate and teach other people about investing and trading. And I love to play games in my free time. I'm a 4 times Danish Scrabble champion and also a former elite chess player. And I just love games and numbers. So I think my passion for games and numbers actually has led me to trading and to investing, because there are some similarities in the sense that you actually calculate odds when you play some games, and also the way that you teach yourself how to become good at something is something that I've done several times with games. So I think some of the skills I have acquired as an elite game player is that I have a highly analytical approach to tackling problems. I have strong pattern recognition skills, which can be used in technical analysis in stock trading and investing. I've also studied how to become an expert at something, and also to keep my head cool when under pressure. And I think these skills are some skills that are very important when investing and when trading. I always love a good challenge, whether it is to run a marathon or climb a mountain. I think I would say that eToro is my latest challenge. So I've been on for the last more than 6 years on eToro. And my challenge now is to take this as far as I can, and to take my account to $1 million from around just below $1,000 at this point. I've been writing several books about chess, about poker. And the latest book I wrote was actually about day trading. That was 8 years ago with my good friend Erik Borg. And we interviewed the best traders in Denmark. And through these interviews, I got very interested in trading and in investing, and this formed the basis of my own investments and trading that I've been taking to eToro since 2017. I'm often interviewed by media, especially Danish finance media, but also international media, and my expertise is especially the tech stocks and the stocks in general. And Also, I speak sometimes about crypto, about Bitcoin. So everything that's related to tech and investing are my main topics when I'm interviewed in the media. The performance overall, you can see here for the last 6 years, I've been having double-digit returns for every year except from the last year, 2022. But we have had a strong comeback this year, and in this moment we're having almost 20% of gains during the last 6 months. So it has been going quite well this year, and we have been taking back most of the losses that we had last year, which is quite good. Overall, I've been overperforming the market clearly over this period, and you can see the stats here. This year I'm at almost 20%, while the S&P is at 14.2. So I'm almost 6 percentage points, or a little bit more than 5 percentage points better than the market this year. And overall, if you look at the whole period where I've been on Toro, my returns are 181%, whereas the S&P has made 77%. So if you had copied me since the beginning, you would have been doing much better than the S&P in general. My goal is to take my account to $1 million, and I've calculated that I need around 15.5 years to do this based on my estimated returns. Today, I just took this screenshot a few moments ago, and I'm at $93,381 US, and I'm more or less on track to do this. But of course, there's a long journey ahead of me, and it's going to take a long time. And I invite you to follow me during this journey and see how I'll do. This is my challenge for the next 15 years, and I'm going to do my best to do what I can to reach this goal. So, as you know, I'm investing in AI, and this has actually been a key element of my portfolio for the last many years. I think the difference between this period and the previous periods is that these days everyone is talking about AI, while I've been investing in it for many years, and that's probably part of the reason why my portfolio have been performing much better than the indices. So one thing that was quite interesting, and a slide I also had in the previous presentation, is that Bill Gates, as you all know, the founder of Microsoft, he said when watching ChatGPT, that this was the most important advance in technology since the graphical user interface, which is something that was invented like more than 40 years ago. So what he's saying is basically that this is a kind of revolution that we're standing in the middle of, and I also think that the stock returns this year shows that there's a huge development in this area, and this is of course something that my portfolio have been profiting from, and I'm going to hold my positions because I think this is not just a fad. It's not just something that's going to be popular during a few months. It's going to be forming this decade, in my opinion. It's going to be the most important development in this decade within technology, it seems. So first of all, many people have been asking, is this AI boom a bubble? And I think the first question to ask yourself in this case is, what actually constitutes a bubble? And you could say that there are 3 things that constitutes a bubble. And I would say that the first thing is that it has to be an asset class or a technology that people don't really understand, and it has to be new. I would say that AI to some extent fits this description. You cannot say that AI as such is new, because people have been speaking about artificial intelligence since the 50s, but generative AI is something that the public was only aware about with ChatGPT, which was launched in November last year. So you could say that generative AI is a pretty new technology. It has been available through OpenAI services before ChatGPT for the last 3 years, but with ChatGPT it became common knowledge. So you can say that this generative AI technology that can produce text, write poems, and so on, that is a new technology for most people. And then the second thing is that almost everyone has to agree that this is the next big thing. And I think you can say that in the case of AI, that's certainly the case, that everyone agrees that AI is the next big thing. So in this sense, AI actually fits the first 2 points of the typical bubble. But the most important thing is actually if the returns are driven by earnings or if they're driven by fluffiness, like more vague ideas about what you can achieve with this technology. And I think there's a fundamental difference here if you look at other booms or bubbles during the last 10 years. You could say that there has been several crypto booms which were driven more by fluffiness than actual earnings. You could also say that other technologies, maybe something like VR goggles, is something that people are not really using yet. So in this sense, maybe this technology is not mature enough yet to actually be driving real earnings, and the metaverse is probably another example of this. You don't have enough people that actually use the metaverse at this point for this to become something that is really driving earnings. But in the case of AI, I think it's quite different because you could see with NVIDIA, which is one of the stocks that I was speaking about in my last presentation 3 months ago. It's certainly something that's having real earnings to back up the very high returns that it has been having this year. So if you look at the stock, you can see NVIDIA developing over the last period. I've been having this stock for many years, and I added to my position in August last year, and also in late March this year. And these positions are up 120% and 50%. And NVIDIA as such is 180% up this year. So you could say this does look like a bubble, and it's actually up more because during the last days it's actually gone to 415 today. So it's gone up a further like 6-7% since I took the screenshot. So actually it's higher, and it may even go higher than this. We'll have to see about that. But the thing is here that this development has not been coming out of nowhere, because what NVIDIA did is that they made for the last earnings report and revision which revised their revenue forecast for this quarter in the range of 11 billion as the midpoint, which was well above the analyst consensus of about 7.2 billion, and that's 52% higher than expected. So alone this quarter alone, we're seeing huge gains in the expected results from NVIDIA's, and earnings consensus numbers have moved up more than 75% plus in the last 6 months. And we're seeing users using tools like ChatGPT, tools like Stable Diffusion, like DALL-E, to a very high extent, and it's certainly driven by user adoption in my view. So you could say maybe at some point we will see that NVIDIA goes too high, and it's logical that at some point you could see like a 10%, 20%, 30% correction, because when you go up 180%, then perhaps at some point you will see a correction. That's a natural thing, and it happens often in the markets. But we don't know exactly when this correction is going to be, and as long as the wave is rolling, we might as well surf it. And so it's not like I'm going to trade in and out of this stock, because right now it's actually just gone up much further since this screenshot was taken. So you can say that the key here is that the earnings results in this case for NVIDIA, and I think also for Google and for Microsoft, does not seem to be driven by fluffiness, but by real earnings. And for these companies, I don't think you can talk about an a bubble as such. This doesn't mean that you could find bubbles in other AI stocks. That's certainly possible, and it's also possible that this could develop into a bubble because what do you say, the prices could get too high. Simply, that's certainly possible. If we see another like 30% up, then you could start speaking about that this would be a bubble, and maybe we should try to take some profits on some of these trades. But right now the markets are very bullish, and we're seeing people being squeezed out of their shorts, and in this case you want to stay long on those positions you have, because the market can go up much further than you usually think when you are in a market that has momentum. So when looking at ChatGPT, it took only ChatGPT 3 months to go to 100 million users, and it's a development that is much faster than any technology ever before in history. If you compare to stuff like TikTok, Instagram, Facebook, Twitter, Airbnb, which were very viral services, they didn't achieve this goal before much later in their development circle. So for instance, TikTok, it was 9 months before they came to this point, and ChatGPT, it only took ChatGPT 3 months. So what you can say is you have seen explosive user growth, and you can see here the number of huge users on ChatGPT cumulative over the last 6 months. And you can see more and more people coming to the service using it, and another 100 million users coming in every month. So you're seeing real user adoption of these tools, and I myself can say that I'm using the tool for a lot of different things, and I know people are using it for various things, not only using the web browser, but also using the API to optimize and to drive productivity through this tool. And I think what is interesting here is that you're seeing people using this to do customer service, to do marketing that's more personalized. You're seeing it to people use it to help coding faster and generate text and generate images. And later, these tools will also be able to generate music at a reasonable level that you could use for instance, a podcast or jingle, and also later videos and games. So we are only, in my opinion, in the beginning of the period where we'll see what these tools are actually able to do and what kind of productivity gains they can drive. So in my opinion, we will see, and we have been seeing, user adoption coming in very fast. And the next thing we're seeing here is that companies are also using ChatGPT and similar tools to a very high extent. And that's going to be the next wave. And this benefits NVIDIA, because they are producing some of the chips that are important for this revolution, the AI revolution. And also every company like Google, Microsoft, Amazon that have cloud computing, that have the servers to drive this development, they will also benefit from this. So for this instance, these are the main components of my portfolio. And I think we're standing in the middle of something that's truly revolutionary. And this doesn't mean that we can't see some people describing this in terms that could seem like a bubble, and people are going to describe things that are not correct, or try to use it in ways that wasn't really the way it was intended, and it didn't fulfill all the things that we wanted it to do. So of course, at some point, when the first euphoria has dampened a little bit, then we can go back and we'll see what it actually can develop. But we already now know that millions of companies are using it to generate text and images and help them with marketing and customer service and so on. And this adoption is only going to continue during the next years. And for this reason, I think that these companies, especially NVIDIA, Google, Alphabet, Microsoft, Amazon, are well positioned in this area. So the conclusions for now are that in the first wave, we're seeing that every company that's providing the infrastructure will be the first winners of the AI boom, because those companies are going to profit, even if that other companies are not going to fulfill all of their goals that they had with all of the dreams they had with AI. And then we're going to see also companies like Meta, Amazon, and maybe Apple benefiting later as well, because they are some of the biggest companies that have the capacity to run the large language models. And then at a later point, we may see AI leading to productivity gains at a later point. So Goldman Sachs has estimated around 7%, which is almost $7 trillion, a 7% boost to global GDP over the next 10 years coming from AI. So that's quite interesting, and I think that's something that's going to boost stock prices slightly during this period, and it's going to be a tailwind for the stock prices during the next decade. So I'm seeing that that a few questions are coming in, and I would say that you can just ask questions during my presentation here, and I think to make it more easy, I will just answer those questions in the end, but you can use the Q&A to actually ask us those questions, and then I'll get back to them later. So I'm going to say a few words about how I'm using ChatGPT myself for investing, because I'm using ChatGPT for a lot of things and experimenting with it. I'm using it to experiments with writing text and translation, and using writing marketing copy and so. But that's not going to be the topic for today. I'm just going to tell you how I've been using ChatGPT to test some of my investment thesis, and I think that's something you could experiment with as well, because it's actually quite easy to do. So, as you know, ChatGPT is an interface. You can go to your web browser and type chat.openai.com. You can open an account, and it's free, and then you can actually ask the chatbot to help you code. And that's what I've been doing in this case. So I've been testing out simple strategies, and this is just a simple strategy for the S&P, which buys the asset, in which this case it's the S&P index, when the moving average is below the 8-period moving average, and then it sells when it's above the 8-period moving average. And then I just want to make a script that can be used in tradingview.com to test if this strategy works well. So I basically just go to ChatGPT, and you can see here, I'm just writing to it in plain English and saying, please make me a strategy for TradingView with PineScript, and that's the coding language of TradingView, which tests this strategy. And then it actually spits out the code. And sometimes there's a few mistakes in the code. Then I can actually just take the error message and put it into ChatGPT again, and it's going to correct the code until it works. And most of the time, especially if it's a simple strategy, then I can easily test it and do it like in 10-15 minutes, and then have TradingView tell me if this is a good strategy, if I've been trading this strategy for the last 5 years in the S&P. And this strategy was actually something that was I found, which is inspired by a programmer and a trader called David Bergman, which I've been working with. And he had this strategy which he tested until 2018. And he saw that it was working quite well. So I thought I might as well try and test this strategy. So after a few iterations, I was able to make ChatGPT generate the code that I can paste into TradingView, and that's actually very easy to do. So one thing is when you use ChatGPT, you have to be precise as you can when describing what you actually want. You should remember it's a system, it's a computer, so the more precise you can be, the better the results you're going to be. So it should be as precise as if you were coding, but you can use natural language to describe what you wanted to do. I would recommend that you write in English. That produces a minimum of confusion. And then you can use ChatGPT to correct the mistakes if there are some mistakes in the code, and you can just post the error message into ChatGPT, and then it will actually correct the mistakes, and you can, after a few iterations, you can usually make it work. If you try and you get more than 20 iterations, so you're not actually able to correct the mistake, then I would urge you to go back, close the browser, and then try once again to see if you can describe it in another ways. Then start over again. That's usually the best way to go. And then you can see here the result that you have in TradingView. You go to SPX, which is SP500. You can press Pine Editor in the bottom. You can paste in the code, press save, and then you can say add to chart. And then it's going to show you when it wanted to buy, when it wants to sell, when it wants to buy, when it wants to sell. And you can test your strategy to say if this strategy is working well during a fixed period. And down here, it's going to show you if the strategy was profitable or not during this period. And I think this was tested for the last year. So in this case, it was a pretty profitable strategy. But the most important part here is not the strategy as such, because I found out by working a little bit more with this that it needs a bit more tuning before you can actually implement the strategy. So I'm just showing you this to show you how to work with ChatGPT to test your own hypothesis. And that's what I've been doing. And that's something I can be using also going forward when I want to learn more about the market, when I want to develop new trading strategies. And obviously, you shouldn't just if it shows you that the strategy is profitable, you shouldn't just be trading it live straight away. You could start up by trading it on a demo account, or you could try to have a back test of some part of the data and then use a forward test on another part of the data. But basically, you can do this very easily with ChatGPT. And this may be something that many people didn't think about you could use ChatGPT for, but actually it's just one of the many, many uses that you can use it for. And people are all the time discovering new things that this tool can do. And that's one of the reasons why I say that the user adoption is real. This is a tool that can do a lot of different things. And I believe that people are going to discover in their own domains over the next 1, 2, 3 years, how many different things you can actually do with ChatGPT. And also, you will discover the things you thought you could do, but that it actually can't do. And that's also some important things to learn. So that's another thing we're going to discover. And I would say one thing that I can see that it can do, and something that I already knew that it couldn't do, is that it cannot develop a trading strategy from the bottom, just going without any information. You need to develop the strategies yourself. Obviously, it can come up with ideas for strategies, but basically what it will suggest is more or less random. So it's much better to use it as a coding assistant than to use it for actual input for developing new strategies. Okay, so let's go on. I'm going to speak a little bit about the portfolio. And as you know, I have a core of the portfolio. Maybe not all of you know, but the core of my portfolio are some of the very solid big tech companies and some of the companies that are dominant in AI research and in AI development. And obviously, these companies are Google, Microsoft, NVIDIA, and also some of the other companies that I think will be having a very strong position in this market. And that's not only related to AI, but also related to all kind of new developments within technology. So I think that's a very strong core. It's around 29% of the portfolio at this point, and I'm going to keep this core of the portfolio because I think over the next decade, I may make some changes, and it's not impossible that I could take out 1 or 2 companies and put in other companies, but I think it's important to have a strong core of the portfolio that you can actually rely on, and something that I believe in long term. So I think that's really important. And I think the reason for the very good performance of the portfolio this year is also because of this core. I think most of these companies have been rising around 30%. NVIDIA, of course, 180%. But this is the core of the portfolio, and that's the reason why, one of the main reasons why the portfolio was performing well this year. But I like to keep a diversified portfolio, so I try to build it out in different directions that can give us more diversification. So I have also exposure to cybersecurity and to cloud companies. And then I've made a very strong inflation hedge, and I made this almost 2 years ago. I have a strong, a lot of positions in commodities and energy, which is working as kind of an inflation hedge. I have banks, some exposure to banks. It's actually not much at this point. It's only a few percentages, so it's not that big at this point. Then I have some luxury stocks that actually have been performing very well this year as well. I have some positions in payments and some in crypto. And many of these positions I see also gold as a hedge against the high inflation. Many of these companies could perform well if inflation stays elevated. So I like to keep this part of my portfolio, even if it hasn't been performing as well as the super strong big tech companies. So this is a part of the portfolio that may perform better in other environments, and I like to keep it as a diversification. Also, you could expect that the energy crisis that we had just like 6, 7, 8 months ago is something that's not really over. We might get back to energy being something that energy prices being on the rise again. And for this reason, I think it's very good to have exposure to energy and also to commodities. And as we know, there has also been a risk of recession during this period. So I've built out this recession hedge, some bond exposure, some cash, and some areas that usually perform well in a recessionary environment. And this is an important part of the portfolio that I could be building on if we start moving in a direction where we see a recession as a more likely scenario. This year, obviously, this part of the portfolio is kind of neutral as well, but it could be a very strong performer and work as a hedge against inflation in case this scenario develops. So I think it's a very good diversification to have. Also, health is an area I've been building out a little bit, and then I have some more traditional exposure to Berkshire, to Nike, and I have exposure to the Indian stock market, which I find very promising, and is something that I probably could speak about in a webinar maybe later this year or in the beginning of next year. I'm actually going on a longer trip to India to study Indian economy and also the Indian stock market. So I will be reporting back on this, and India is a very promising stock market that I want to have exposure to already at this point. So that's something that I will tell more about at a later point. And then a bit about the current markets. I put out a poll 12 days ago and asked copiers and followers and anyone else that cared about this taking part in this poll. We had more than 500 votes to ask how people see the market, if they think that it should go slightly up since this point, which was when the market was about 4,200, which was 12 days ago. If people thought that the market would end slightly up, clearly up, slightly down, and clearly down. And the clear winner was, with almost 70% of the votes, that the audience, my followers and copiers, are quite bullish. And also, if you look at the short term, they have been right, because we're almost 5% up since I posted this poll. So we're already in the slightly up and clearly up area. So the ones that were bullish have been proven correct so far, but we will have to see how the year ends, and that's something that I can speak a little bit about in the following slides. So obviously, this gentleman is a man that influences the stock markets very much. So this webinar is held live just 2 hours before the FOMC meeting minutes are going to be published, and we will know if the Fed made another rate hike or if they paused for a while. And the market is expecting, I think, with about 85% probability that they will make a pause this time, but we'll see how it develops. As it's going to happen in 2 hours, I'm not going to give any prediction about this. I'm just going to tell you what the market thinks. So the market thinks that he's going to have a pause, and we'll have to see what happens in a few hours from now. And if you don't see this webinar live, then you will know when you see the webinar what actually happened at this point. But of course, if he pauses, that's going to be priced in to some extent by the market. Maybe it's going to be slightly bullish, but if he doesn't pause, then that's probably a slightly negative surprise for the market, and we'll have to see how the market reacts on this. Overall, the main concern, or one of the main concerns, have been inflation, and we see inflation coming down. The last inflation print was at 4%, so the trend is downwards right now, and that's a positive thing, and that's also the reason, one of the reasons why the markets have been going up this year. We're seeing core inflation being more sticky, and core inflation is inflation without the more volatile food and energy prices. And ideally, we would like to see core inflation coming down as well, because we know that energy is very volatile, and we know that the prices can go very much up and down. And for this reason, when we see core inflation turning more downwards as well, then that's going to be bullish for the markets. And that's what we would be hoping for if we're still bulls in the markets, which we are at this point. The portfolio is almost 100% long. I only have a little bit in cash, so at this point we are of course expecting the markets to develop in a positive way for the rest of the year. But let's go through the bullish and bearish arguments on the next slide. So the main reason, in my opinion, why the market, or one of the main reasons why the market has been going up, is there's still more liquidity that is being pumped out into the financial system. And that's actually not something that's focused very much on in the financial media. But what we're seeing now is that China is pumping liquidity out in the financial system. And US also to some extent doing the same, especially as a response to the bank crisis that we had a few months ago. And even though rates are still high, we're seeing the two most important central banks pumping liquidity out of the system. And when they're doing that, that is actually something that has quite a large impact usually on the stock market. So we saw liquidity being at the lowest level in October, where the market bottomed out, and since then it has been rising, and since then the stock market has been rising too. So there's a very high correlation between the global liquidity and the way that stock markets are developing. And for this reason, I'm still quite bullish overall on the long term. And I stayed bullish this year, even though there are still a lot of things to be worried about. And of course, we can always see corrections in a market that goes up like it has been doing so far. You can always see corrections of like 10% and so. But inflation seems to be coming down, and if this keeps on developing like this, and especially if core inflation comes down, then that's going to be bullish for the markets. The economy is still very resilient, and unemployment is still very low. actually, if the unemployment stays low, that can be slightly negative in the sense that we are seeing wage inflation, and if wage inflation is too high, then that's going to keep overall inflation high too. So in this sense, low unemployment is not only a good thing. It can actually have negative consequences as well. But another bullish element is that the Fed may pause rates quite soon. If it doesn't happen today, then perhaps later this year is the most likely scenario. And that is probably going to be bullish for the markets. But I would say at this point, the market seems to have priced in this scenario. So the catalyst for the market, if they pause, may not be very large at this point. And then the bearish arguments is that the core CPI is not coming down so fast. It still remains quite high. And this may mean that interest rates will stay higher for longer. And that's a challenge. And then growth is expected to slow down due to the high interest rates. And that's probably going to happen in any case. So it would be natural to see some kind of correction later this year, maybe a 10% correction or so, after we're having this quite strong bullish run during the first half of 2023. And we are seeing the S&P up more than 12%, and my portfolio almost 20% up. So obviously, if it continues like this, then at some point there's going to be a correction. But we're not trying to time this correction. We just stay long in the markets because I'm expecting that we will close this year out on a slightly higher position and slightly higher price than the price that we are at currently. And so I'm almost at the end of the webinar. I would just like to say to you that I would urge you to make investing a habit like I have done. Take a little bit out of your paycheck every month and invest it in the stock market or in something that you believe in. If the market goes up, you will earn money. If the market goes down, you will be able to buy more at a lower price. And over time, there's a pretty good chance that you will see good returns out of this. If you invest for 10 years, or if you had invested for 10 years, a 10-year period historically, your odds of being profitable would be 94%. And this tells you that the longer time horizon you have, the better your chances are of being profitable when investing. So if you have a patience and focus on the long term, then you're more likely to have success with investing. And with these words, I will conclude the presentation and open up for questions. So you can use the Q&A box, and I'm going to take the questions that I have in the Q&A box and also take some of the questions that I was asked on my eToro wall. And obviously you can always ask me questions on eToro. I'll try to get back to you as soon as possible. If you have anything that you would like my opinion on, or anything regarding copying on eToro or anything else, then just write me a message or write on my wall on eToro, and I'll get back to you as quickly as possible. So the first question I was asked on my eToro wall is if I can please discuss my thinking on why previous booms and busts are different to this current boom. And I think I've already touched upon this. So the main point is just to say that this AI boom is something that I find very different from other booms and bubbles. For instance, the crypto bubble or metaverse or other technologies that have been hyped and may have promise in the long term, but haven't really played out yet. And I think the main difference here is, as you see, people are adopting technologies like ChatGPT like crazy. We're having billions of people using ChatGPT and other AI tools, and it proves to be very useful for generating text, generating images, and probably unlocking productivity gains for small companies, medium-sized companies, and also large companies. And whatever happens, if you invest in the companies that supply the infrastructure of this AI revolution, then you are very well positioned, in my opinion. So I think that's the reason why this is different. And it doesn't mean that we cannot have a bubble at some point in AI, that we are going to see too elevated prices, or that some stocks can be in a bubble already. That's certainly possible. You will see some people hyping this technology and speaking about it in a way that something that's way beyond what it's capable of doing now. So of course you should be aware of this. And regarding the AI boom, the next question, surely there will be winners and losers. And why do I think I have the winners in this race? And the reason is what I've touched upon already, that I believe that starting out with investing in the companies that are providing the infrastructure is the right way to do this. And I'm going to follow this area extremely closely during the next month and years. And if whenever something new and interesting comes up that I find is reasonably valued, then I'm going to invest in it. So I will do the research for you, and I'm going to keep you updated on this on my eToro wall. And I also plan to do a bit more on Twitter and maybe later on YouTube. So I'm going to keep you updated on the AI development. So just try to follow me on YouTube and Twitter, and then you can follow me whatever I think about these new developments, and of course on eToro as well. And then there's a question here, which is, I believe that we can't comprehend how much AI will change the world in terms of development. And because of this, there will be much more room for the market to grow in terms of stock prices than people are currently pricing in. Is this something you agree with? And I would say that on the long term, I would agree with this. I think in the short term, I think everyone is rushing into AI stocks right now. So we are seeing a boost of the stock prices right now, and that may continue for a while, or we may see a correction. That's not something that I want to try to predict on the short term. But on the long term, like let's say 5-10 years, I think I would agree very much with this, because I think it's a technology, especially generative AI, which is in extremely rapid development. And I think for this reason that we're going to see companies, especially companies providing the infrastructure, benefiting very much from this. And so I'm going to jump back to the slide of my portfolio, and then I'll take the questions that I have in the chat. So you mentioned taking profits on positions such as NVIDIA. Approximately at which range would you consider doing this? I can say to this user, I'm not going to say the name, but this to this user, that I don't have a fixed range at this point. I'm just going to see how it develops. But as I said earlier in the presentation, like if we see another like 30% up in some of these stocks, I may consider to taking off a little bit of this position. I mean, it may turn out that right now is the right moment to do it. So I'm not going to trade so much in and out of these stocks because I believe they are long-term winners. And if they get to an elevated price level and they make a correction, then over time, I believe that we will see a very strong development for these stocks. So I don't think I'm going to make very much trading in and out of this. But if I see something that I believe is a very clear bubble territory, then I'm going to take some profits. But I will still keep my position overall. So this means just reducing the position a little bit, but keeping most likely the positions overall, because I think NVIDIA is a very promising company. So I don't want to exit the positions altogether. And then the next user is asking, how about the danger coming from AI? For instance, recent European Union legislations imposing some restrictions on AI. And that's a very good question. And I think that's something that's bound to happen. And I think actually it's a good thing. especially for the society as a whole, that we're getting restrictions on how to use AI, because it's a technology that needs to be controlled. So overall, I think it's a good thing, and I think it's not going to dampen the development, in the sense that people would still want to reap the benefits of AI. And we've actually been seeing some legislations in the European Union just coming out today, and I think it's they are setting up some natural, I think, boundaries, which is, for instance, that when you launch a new model like ChatGPT, then there should be some kind of review of this before it's launched to the public, and I think that's only a good thing. And if anything, that's going to help the big companies in this area. And that's actually slightly negative for small companies, but big companies, they have all the power they need to control and handle this legislation. So companies like Google, Microsoft, Nvidia, they will be able to handle this legislations, these restrictions, without any problems. But actually it can be a little bit problematic for smaller companies. And I think that's another reason why you would want to invest in the big companies and the companies that provide the infrastructure at this point, because those are the companies that are not going to be annoyed too much about legislation coming in.